Greetings, ladies and gentlemen. Welcome to our latest virtual investor update. I'm your host, Rachel Curlew, AVP of Investment Banking. I'm joined by our esteemed investment advisor, Brandon Thomas, who will be bringing a wealth of experience and knowledge to our discussion as usual. Today, we've got an insightful discussion in store for you, featuring two incredible companies that we're excited to discuss: General Accident Insurance Company Limited and Margaritaville Turks Limited. If you're a fan of the content, then don't forget to subscribe. Also, hit the bell to stay up to date with the channel. We upload content like this every week. Also, if you want to embark on your first investment journey, you should take that first step with Mayberry. So be sure to follow us on social media to learn more about how we can help you get started. So I'll start off with Margaritaville Turks Limited. Margaritaville Turks Limited, or MTL, as the name suggests, is domiciled in Turks and Caicos. The company was established to fulfill the food, beverage, and entertainment needs of passengers that arrive in the port in Turks. It's actually the main restaurant at the port in Turks, and they've been operating there since about 2006. The company is a subsidiary of the Margaritaville Caribbean Group, owners and franchise operators of Jimmy Buffett's Margaritaville restaurants, bars, and retail stores across the Caribbean. Pre-pandemic, the company did pretty well. They booked annual revenues of US $7.5 million and profits of about $750,000 annually. But it's important to appreciate that during the pandemic period, the port in Turks was closed for about 20 months. It actually opened in December 2021. So Margaritaville Turks, they didn't book revenue for almost 2 years. During the closure period, though, the Carnival Corporation, along with the government of Turks, they were able to do some major refurbishing at the port. They were able to extend the dock to accommodate larger cruise vessels. And the company actually, they were also able to change out some old inventories, upgrade their menus, and train their staff where necessary. So some good did come out of the closure period. Things have significantly picked up in Turks. We're seeing where the passenger arrivals have increased to almost pre-pandemic levels, and this has definitely translated to some profitability in Margaritaville 9-month results. They booked revenues of US $4.9 million, just shy of $5 million. This is an increase of $4 million from the $975,000 reported back in February 2022. Cost of goods naturally increased accordingly, but the company did indicate that these margins have been trending down year to date, which is good. Examining the balance sheet, total assets are up 33% to $5.5 million US, while shareholders' equity has also improved 51% to $3.5 million US relative to $2.3 million last year. We are seeing here the stock is trading at about $18 Jamaican dollars, but at a relatively low PE of almost 6 times relative to the main market PE of about 10 times. The stock does have a 52-week high of almost $30, but that corresponds to a PE of just about 10 times, which again is relatively low compared to the junior market PE. Examining the quarterly profit graph on the next slide, we can see MTL booked losses for 8 consecutive quarters, but as I mentioned earlier, this resulted from the complete shutdown of the ports in Turks during the pandemic period. Examining the quarterly profit graph on the next slide, we can see that MTL booked losses for 8 consecutive quarters, but as I mentioned earlier, this has resulted from the complete shutdown of the ports in Turks during the pandemic period. We are, however, seeing a significant improvement for this quarter, where the company reported its highest quarterly profits of $730,000 ever. This is supported by the reopening of the port and the increase in passenger arrivals at the port in Turks. For the period, profits were earned from the arrival of about 330,000 passengers in Turks, which is a major improvement relative to last year, where the passenger arrival was roughly about 300,000. So we can definitely see activities picking back up on the island. Looking at the next slide, MTL has been trending at an average price of about 17-18 year to date, and an average price of about between $22 to $23 last year. The stock does have a 52-week high of $30, almost $30, as I mentioned earlier. So as things continue to improve in Turks, coupled with the expansion of the port to accommodate larger cruise vessels, we're hoping to at least see a 50% improvement on the existing stock price of $18 within the next 9 to 12 months. What are your thoughts?
So I couldn't agree more, Rachel. So actually I have a friend on the ground over in Turks, and he has been telling me how much the port is bustling. There's increased stopovers from visitors to the island, and that can only bode well for Margaritaville. So in my opinion, and based on the numbers that we see now, Margaritaville will continue to do extremely well moving forward, as long as especially the cruise industry continues to improve. We see where even locally, we're being told that we expect over 1.3 million stopovers from cruise visitors alone. So that can only bode well for Turks and Caicos, which is an even much more larger port than our ports out here locally. We can expect an increase in the stopovers, and that will only feed into the revenue from Margaritaville, which is located right there on the port for the cruise ships. So I expect them to do well. I expect continued increase in profitability as well, and that would be good news for them moving forward, especially based on what they've had to go through for the last couple of years. So expecting big things from Margaritaville.
Great, thanks for that. So I'll hand over to you now to get started with the GENAC.
Thanks, Rachel. So I'll be focusing on general accident. And for those who don't know, general accident is a general insurance company which focuses on primarily underwriting personal and commercial property as well as casual insurance. So taking a look now at the numbers, we see where the gross premiums increased by 8%. That has boded well for them in terms of their overall revenue, and that led to a net profitability increase of over 300% year over year. We're comparing 2021 to the year 2022. I would see where that has led to an increase of over 300% in their net profitability from 149 million to 597 million. So huge increase in profitability year over year, and that has led to a PE ratio of 8.48 times. The share price is currently at roughly $4.90, and at 8.48 times, which is their PE, that is extremely good for a junior market company or even a main market company. The junior market average is roughly 17 times right now, and on the main market is 10 times. So it is definitely undervalued. I will get into more reasons why. Moving on to the next slide, we see where the quarterly profit movements. You can see where in the last 2 quarters, things have, what I would call normalized. They've now gotten back to a certain level of consistency over a certain figure. We see where in Q3, we saw 206 million in profit, and in Q4, we saw 286 million profit quarter. This is extremely well for them, and we expect that to increase moving forward just because of the growth that we can expect out of Trinidad and Barbados. We can note where management has said that we continue to enjoy excellent growth in premium income across the region, primarily due to the increased penetration of the broker markets in Barbados and Trinidad. Although we have not achieved the profitability targets in our regions, we remain committed to our growth plans and are confident that we will meet our strategic objectives. Moving on to the next slide, we see where the price movement. So the 52-week high was at roughly $6.48, and it went to a 52-week low of $4 at one point, and now it's at $4.91. So as I mentioned before, it is undervalued PE wise, and that does present an opportunity to buy into this company. I want to state though that, there are some reasons outside of just, the PE ratio why I think this is a good opportunity to invest into GENAC. Last year, certain things were changed as it relates to the MCT test, which is the minimum capital test, where now general insurance companies who used to have that MCT ratio at 250%, it has now lowered to 150%. What this means in layman terms is that general insurance companies will now have more capital at their disposal to invest, which could lead to increased profitability. In addition to that, General Accident will be focusing on growth in Trinidad and Barbados. As I mentioned before, Trinidad specifically grew, their gross premiums grew over 45% last year, and is a growing and emerging market for General Accident. And management has, stated that their primary focus is growth in that region. And I expect continued growth moving into this year in 2023. They're a relatively strong dividend player, and they're focused on, their technological build-out to increase efficiency and to continue to be able to scale, at a relative ease and at a relatively fast pace. So once again, I really expect big things for General Accident moving forward, especially coming out of Trinidad. They will continue to consolidate, their stronghold here in Jamaica, and continue to grow that organically as well. And, with the primaries behind it, Mrs. Donaldson and the parent company, which is led by, Mr. P.B. Scott, management is really strong, and I expect continued growth from GENAC moving forward. Any thoughts, Rachel?
I agree with you, Brandon. The company is actively growing outside the region. As we saw on the first slide, gross premiums increased 45% alone in Trinidad. So we can expect their profitability to improve as they continue to grow in Trinidad and Barbados. They've been actively trying to maximize the return on their investment portfolio. So as interest rates start to trend back down, let's see how the company rebalances its investment portfolio to remain committed to their growth plans.
Yeah, and it couldn't have come at a better time. That MCT ratio decrease came last year when a lot of stock prices were depressed. And as you mentioned, as interest rates, trend down and stock prices increase over time, they should really benefit from booking gains from those stock prices. So once again, good points for GENAC, and I think it's a good buy at this moment.
Great. And that's a wrap. We hope you enjoyed today's discussion and learned something new about these incredible companies. A big thank you to my co-host Brandon for his insights and commentary, and to all our viewers for tuning in. If you're curious about updates on our virtual investor forum, then find us on social media. We share our live stream dates and upcoming guests on our social media pages. Follow us and stay on top of all things forum related. Also, don't forget to subscribe to our YouTube channel, Mayberry Investments Limited, to stay up to date on all the latest news and information in the world of investing. Keep safe, and remember, wise investors, slow and steady, wins the race. Thank you.